Hi, welcome to the Market Alert for Tuesday, the 15th of October 2019. So the CME says Bitcoin futures gaining interest from big investors. We could do with some news to boost this market, get it out of this sideways move that we're seeing here, where it's become fairly quiet over the last few days. The market's still holding at the 20 MA in the daily chart. This is the bigger time frames. So we start off in this and have a look, see what you've got. And you can see we've got a trading range there, which is a bit of a pain to say the least. But then there's always a calm before the storm. You can see here as well, it's in a defined range. The market above the 50 bar, but below the 20 bar. So a bit of consolidation and the lines are meeting, which again is another clue that we've got things quietening down at the moment in this market. And you can see this yesterday, the market coming up to the 200 in the 15-minute chart, and then pulling back to 76% and then moving lower, and then staying below the 20 bar moving average until, of course, we see this big bar pull back. It closes just below the 200 bar moving average. Then we've got some potential weakness here with these up thrust bars. The market then trades again in a sideways range. This is a tiny range just where it looks like there's a lot going on, but there isn't. The market then is pumped to the downside again. You can see there, shake out the week longs. You can see the buying coming back in with the green bar. And then eventually we get back through the 200 MA and hit Sunday's high. However, prices have pulled back and they're really coiling overnight. You can see this here. And again, just look at the averages. If there's a lot of volatility, they will spread wide and away from each other. And at the moment, they're becoming very coiled, which means that this market is going to be fairly quiet, which you can see in the 4-hour, and the daily chart is the only one where they're still spread wide at the moment. So not a lot you can do about this at the moment. The market in this bit of a sideways move there, and you can see even this range is only $150 move. So stocks extend Friday's sell the news trade deal losses and moved higher initially. So let's have a look at this. Start off with the daily chart. We can see that yesterday fairly quiet because of the Columbus Day holiday. The Treasury is closed, but the stock market open. 76% creating a resistance there. The market coming back, but then finding support at the 20 bar MA, and then up on the overnight. Desperate to move higher and keep this market moving to the upside. So in the pre-market session, there was some weakness. So we came below the 200 bar moving average and sailed lower, all the way down a few hundred points there, a couple of hundred points, 250 to be precise, and then the market finding support and making its way back. And then as soon as the cash market opened, we see the cash stocks being marked up. A bit of a battle to begin with, but that same pattern again. Let's just get the market to the upside, which is what they do. They take it to the 200 bar MA, as you can see there. It comes back and then goes back and then goes into a bit of a sideways move, but finds support until we get to here where the market comes back to the DP. If the market breaks the 200 bar moving average, have a look at the DP level, which is the purple or mauve coloured line there, and you'll see the market finding support. If it breaks this DP level, then it will continue lower. So just something to keep in mind there. So the market is brought back again, bouncing off these psychological levels just before the DP as well, and we see a 76% retracement of this level as well from here, the last high to the left, to here, 76. And also if you were to roll it back one more, you will see that also resistance area there, and the market struggling with a minor psychological level and then moving back once more before the close there. So it's a matter of piecing all of the bits together that you see, combination of the test bars, psychological lines, pivot points, and the Fibs and 200 bar MA as well. And when you combine them all together, it makes it a lot easier to actually see where the market's trading and going to trade. So here we've got what I was just talking about, the market coming back down towards the 200 bar MA. On this occasion, the market finding support at the DP before it gets to the 200 MA. So again, over here you'll see prices closing back above the DP and the 200 MA as well. The theory being, of course, or rules, is that if prices are above the daily pivot, then they're bullish. If they're below, they are bearish. And in conjunction with the 200 MA, like I say, you can really use this to your advantage. So the stock market attempting to move higher there, and if it does, then it needs to take out the 76% retracement as prices start to move in the futures market overnight there. So yes, some interesting developments there. Just the two trades, winning trades to the upside for the Dow. Meanwhile, in Boris world, we can see yesterday we got some potential weakness there with Telegraph Pole. 200 MA in the way as well. The market through the 76% retracement. So what's the pound going to do? Well, that's going to be down to what happens with the deal this week with Brexit. And is it this week that Boris heads to Europe? I think he has to have by Friday, isn't it? There's something about he's got to have a deal or something. Or the Ben Act takes effect, or I don't know. But anyway, it's bringing volatility to the pound now. So this is good news, whatever's going on. And let's just see here. So with the market move lower, it was already below the DP, headed down to the 200 MA where we see the market tested, and then we see the buy signal, the market then moving higher, trading all the way back up 100 pips before it comes back to the DP level and then down to the 200 MA where it finds support, drives through the to the DP level. And again, even though the market's closed, I'll just show you this. You'll go from this high to this low, and the market trades up to 76%, fails to hold, and then it's come back and then just traded in a sideways range, having broken out here to only come back. So the pound waiting for news of any sort of Brexit deal. If there is a deal announced, then the market will shoot through the 200 MA. If not, then we do this. We head south because it will be a disaster or deemed to be one. And then finally, the implied volatilities. This dropping down again yesterday. This is actually a precursor to a correction in the market. Not necessarily good news as far as I'm concerned. This market, and what I mean by this market, I mean the Dow, looks very, very weak. As we discussed yesterday, the choppiness of this market during the last year, more corrections, and this can be seen by the volatility spikes here as well. So again, I still don't remain optimistic about any big up move, and neither do JP Morgan either. Actually, they've said that the selling is coming. Not that that's definitive by any means, but I mean, you only have to look at the chart and see how it's choppy it is and how it's struggling. And again, when you start to see it with the red and the green, you can see how much more violent the corrections are. But coming back at the moment, and this is great because the lower this goes, the bigger the correction will be. So it's fine by me. It doesn't. That's what it's saying. When volatility gets to historic lows or down to multi-year lows, then the underlying market will break out big style to, in this case, to the downside. And then finally, Deutsche Bank, we've not looked at for the last few days, but certainly the repos seem to be making their way there. The Fed broke with precedent and regulatory guidelines last week and is now funding foreign banks as well as US banks on the repo market. And no doubt this has helped the share price go back above the 20 bar moving average and head towards the 200 They are doing their damnedest to keep this going. It's not being noted on the mainstream media anywhere, and they've already said for November they're going to up the overnight to 300 billion. Now that's some serious money. Of course, it doesn't stay on the Fed's balance sheet, but the 60 billion a month they've now promised to print to buy rehypothecated Treasury bonds, which are bonds that have nobody knows who owns anymore because they've gone through the system that much, to buy these toxic bonds off the banks as well. They just couldn't make this stuff up. There are danger signs if you're prepared to look for them. Anyway, on that cheery note, or forewarned is forearmed, let's see what happens today. Just a quick summary though, Bitcoin struggling, very narrow range, so again I would stand aside until this moves a bit. The pound is going to be moving based on whatever Boris announces with deals, and the Dow is going to attempt to try and move higher. However, it's Tuesday and the market looks fairly weakish behind as well, so trade what you see, don't have an opinion about where you would like it to go. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.